Guys, we had a great opportunity for our interest rate tracker to shine. Today was the Bank of England rate decision. You see here in the calendar, they moved from 425 to 4. And if they're cutting rates, the first thing that you might think is, well, the currency should go down, right? Because they're cutting rates. Well, the rate tracker could have shown you that this was 93% priced in. So the market always moves on expectations, but that's not why the rate tracker was shining today. The reason why was once we got this hawkish cut, so you had a major deviation where less members voted for a cut than anticipated. And, so you have a deviation on both sides. You look at the chart, market's going up, pound dollar's going up, all the crosses are going up. But the question you ask yourself is, what do you do 40, maybe you've gotten something out of the initial event. What do you do 40 minutes into the event here? Do you still buy on a pullback, right? Or what if you miss the event itself? Do you still buy? Same goes for the pound Swiss, right? You look at the pound Swiss, any sort of pullbacks here, maybe the market's pulling back here, or maybe we finally come down here, or, maybe you have the pound CAD, same deal. This would have been a really interesting pullback here, right? Again, 40 minutes in, or your pullback here, right? So how do you have the confidence or the confirmation really to continue to buy this? And one of the ways that you do, again, it's not the only way, but it's a very powerful way, is by looking at our interest rate tracker. Now, for the Bank of England today, what you were able to see is our near real-time tracker. And what this told you is this was happening in real time, right? So right around the event release, here it is, boom. They start pricing out all of the easing. This is the stir market, interest rate traders. People are actually really focused on this, right? Not just spot traders, this is interest rate traders. So they are pricing out this event, or they're pricing out the easing. And you can see it move from 23 basis points all the way up to like 1.5 basis points. But the key here is, an hour after the event, 2 hours after the event, this hasn't dipped down again. And traders are pricing in more easing. Instead, it stayed up here. So what that means is this chart's telling you, okay, what happened in the market is real. And even if spot dips against you a little bit, there's a nice high likelihood that it'll continue in that original hawkish direction, because the stir market is telling you the truth. It's saying, nope, we're still pricing out easing. An hour after the event, 2 hours after the event, 3 hours after the event, right? So you can use this as a confirmation signal. It's very powerful. And it's just a really good example of how to use that today in your trading.